Well, my friends, don't look now, but there seems to be some positive surprises in retail. Nordstrom topped Wall Street's first quarter sales expectations, even as shoppers spend less. Nordstrom topped fiscal first quarter sales expectations, even as it reported a drop in spending across most categories. The retailer reaffirmed its full-year outlook. Kohl's shares jumped as the beleaguered retailer reported a surprise profit. Kohl's reported an unexpected first quarter profit Wednesday. The company's shares closed more than 7% higher. Kohl's reaffirmed its full-year outlook. There has been disaster in the retail sector recently. The last 2 Walmart locations in Portland are permanently shutting their doors on Friday. The closures, which were announced in late February, mean nearly 600 employees are being laid off. You have probably already heard that Kohl's has been in trouble for a while now, and that management has been trying to sell the company, and that, so far, no reasonable offers have been received. So, the company continues to operate independently. If you follow retail, you already know that Bed Bath & Beyond filed for Chapter 11 bankruptcy. What does all of this mean for the retail industry? What does this mean for the US economy? And what does this mean for the future of the United States? But, before we get into all of that, please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified when new videos are released. And, before we continue, a word from the sponsor of this video. Today's sponsor is InnerLife.com, creator of the InnerLife STS system. InnerLife STS is a cloud mobile platform for mental health care and its integration with primary medical care. InnerLife STS is designed for assessment, data collection and analytics, documentation, and progress tracking. InnerLife STS creates and composes conceptualized narratives and builds them into professional-grade reports. These reports are designed for use by mental health professionals, primary care physicians, justice system professionals and universities and include mental health assessment reports, mental health treatment reports, and treatment progress reports. And InnerLife STS uses doctor-selected pseudonames for all patients. So, only the doctor knows the patient identity. Nordstrom's fiscal first quarter sales topped Wall Street's expectations on Wednesday. This came even as the retailer reported a spending drop and predicted slower sales in the coming months. The higher-end department store also reiterated its outlook for the full year. Nordstrom expects revenue to fall 4% to 6% and adjusted earnings per share to range between $1.80 and $2.20 for the fiscal year, excluding the impact of winding down its stores and online business in Canada. Yet despite declining sales, Nordstrom stressed its progress with managing inventory, cutting costs and drawing shoppers, especially to the off-price brand Nordstrom Rack. Sales at Nordstrom Rack improved late in the quarter, with the strongest performance in April, the retailer said in a news release. We're encouraged by our momentum, especially given the uncertain macroeconomic environment, CEO Eric Nordstrom said in the company's earnings release. The company's shares rose nearly 5% in after-hours trading. In the fiscal first quarter, Nordstrom's net loss was $205 million, or $1.27 per share, compared with a net income of $20 million, or 13 cents per share, in the year earlier period. Excluding the costs related to winding down Canadian operations, Nordstrom's adjusted earnings per share were 7 cents. Nordstrom is looking for growth after it struggled with stagnant sales and largely missed out on the stimulus-fueled spending boom that benefited other retailers during the COVID pandemic. In the most recent fiscal year, which ended in January, the company's total revenue was $15.5 billion. The figure was flat compared with the total revenue that it reported in the fiscal year that ended just prior to the start of the pandemic. Nordstrom's lagging sales drew interest and scrutiny from activist investor Ryan Cohen, founder of Chewy and chairman of GameStop, who bought a stake of the company earlier this year. Nordstrom's total revenue, including credit card sales, fell about 11% from $3.57 billion in the year-ago quarter, but surpassed Wall Street's expectations. Sales in most categories in the U.S. declined in the first quarter year-over-year, the company said in a news release. In the year-earlier period, shoppers flocked to stores for designer shoes, dresses and wardrobe refreshes to attend weddings, reunions and other social gatherings as the world reopened after the pandemic. Net sales at Nordstrom's namesake stores decreased 11.4% year-over-year, while net sales for Nordstrom Rack dropped 11.9%. Activewear performed best for Nordstrom in the first quarter. Beauty and men's apparel also did better than average, the company said. Nordstrom joined Kohl's and Gap in reporting a surprise profit and better margins in the fiscal first quarter. Nordstrom and Gap posted profits on an adjusted basis. All three companies have struggled with lagging sales, the buildup of unsold inventory, higher markdowns, steeper costs of freight and more. Declining inventory levels and business costs could be a silver lining for Nordstrom and other retailers in the coming quarters as they face slowing sales. Inventory for Nordstrom at the end of the 3-month period fell nearly 8% year-over-year. As the retailer chases a turnaround, it has shuttered parts of its business. It wound down personal styling service Trunk Club last year, and announced the end of Canadian operations earlier this year. Digital sales fell 17.4% year-over-year, partially due to Trunk Club's closure. Nordstrom plans to open 20 Nordstrom Rack locations this fiscal year, with plans to open more in the longer term. Chief Stores Officer Jamie Nordstrom said, "The stores, which offer brand names at lower prices, are the company's single largest vehicle for new customer acquisition and could resonate during an inflationary time." Shares of Nordstrom have fallen about 5% this year, lagging behind the S&P 500's 9% gain. The company's stock closed at $15.30 on Wednesday, bringing the company's market value to $2.47 billion. Kohl's shares spiked as the struggling retailer posted a surprise profit and affirmed its full-year guidance while it chases a turnaround. Across the retail industry, Walmart, Target, Foot Locker and others have spoken about how high food prices have made selling clothing, sneakers and other discretionary merchandise tougher. Kohl's, however, has had to tackle a more fundamental hurdle, proving that its brand still resonates with shoppers and getting back on track with consistent sales growth. It is opening more Sephora shops, expanding in merchandise categories like pet and home decor and featuring gift-giving items ahead of holidays. Kohl's reiterated its full-year outlook. It said it expects net sales to range between a decline of 2% and 4%, including the approximately 1% impact from having one more week of sales this year. It said it expects earnings per share to range from $2.10 to $2.70, excluding non-recurring charges. In the fiscal first quarter, Kohl's net sales fell 3.3% to $3.36 billion from $3.47 billion in the year-ago period. Kohl's surprise quarterly profit comes after multiple quarters of disappointing sales and a sinking stock price. Last year, the retailer became a target for activist investors Ancora Holdings and Macellum Capital, which pushed the company to oust its then CEO Michelle Gass and shake up its board. Kohl's also discussed and then ended a bid last year to sell its business to Vitamin Shop owner Franchise Group. Since then, Kohl's has tapped its new CEO Kingsbury, former chief executive of off-price retailer Burlington Stores. Over the past year, Kohl's efforts to reinvent itself and woo shoppers have run into challenges as middle-income consumers feel pinched by inflation and buy fewer discretionary items, such as clothing. That contributed to a big loss in Kohl's holiday quarter and week outlook, which the Wisconsin-based company reiterated Wednesday. On the analyst call, Kingsbury said, "The middle-income customer is being squeezed," but said Kohl's can attract those shoppers by emphasizing value. Despite a challenging economic backdrop, Kohl's made progress in the fiscal first quarter. Store traffic rose, and when shoppers visited stores, they put more items in their baskets, Kohl's CEO Kingsbury said. Average ticket declined as Kohl's had clearance events to sell through extra merchandise. Inventory was $3.5 billion at the end of the quarter, a drop of 6% year-over-year. Investors have closely watched those levels, since the glut of merchandise at many retailers has led to higher markdowns and lower profits. Kohl's margins improved in the quarter, as costs of freight and online shipping costs dropped and the company got more strategic about markdowns. During the quarter, Kohl's had its strongest sales performance in February. March came in lower than the company anticipated and April was in line with its expectations, Kingsbury said. Kohl's plans to make up for the weakness in June, which was a weaker sales period in the year-ago quarter. Kohl's hired Nick Jones, a retail veteran and former chief merchant from UK-based department store Marks & Spencer, as its chief merchandising and digital officer in February. Sephora has also been one of Kohl's biggest traffic and sales drivers. It began opening Sephora shops in its stores 2 years ago. It plans to add the shops to all of its more than 1,100 stores, and will have more than 900 by the end of the year, Kingsbury said. Beauty sales at Kohl's increased 150% year-over-year, he said. At the Sephora locations open for the past 2 years, comparable beauty sales grew by the mid-teens. Sales trends at the newer shops also surpassed expectations and gave people more reasons to visit stores. This good news comes amid doom and gloom talk from a lot of retail analysts. Retail experts warn that malls will see Ice Age and Darwinian destruction if they don't reinvent themselves. Walmart will close its last 2 stores in crime-plagued Portland, Oregon. Portland is contending with a relentless wave of shoplifting that has hammered retailers. Many retailers are impacted by this so-called retail apocalypse. The Fed rate hikes have slowly started to reduce inflation, yet prices remain high. Unemployment figures persist at record lows, despite many large employers cutting back. But, what do you think? Please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified when new videos are released. Please share this video on social media. Thank you for watching.